This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Day Trading Frank. It's approximately 9:05 p.m. on a summer evening here in the New Jersey waterfront overlooking New York City. It is 9:05 p.m. on March 3rd, 2020. This is the Sunday strategic update, webinar update. The session will be recorded, uploaded to Clueless Day Trading YouTube channel within an hour or less or so after we finish our session. And prior to that, especially for new members, we're getting used to the format. We do go ahead and post the recording link from GoToMeeting directly on the Twitter feed. So if you don't want to, if many of you who are looking to listen to it on YouTube want to listen to it faster, then you simply have to click the GoToMeeting link on the Twitter feed, and it opens up the full recording. Just keep that in mind going forward, because YouTube has been a little bit slower than usual because of the stay-at-home stuff. There is a significant amount of traffic on the internet, and the upload is a little bit slower than what it normally is. Full disclosure, this is purely for financial education, not for any solicitation or advice, and we shall begin. So I hope this session finds you all in good health and spirits. Just found out over the weekend that somebody that I have known for a little while now, actually contracted the COVID-19, okay? And it's getting close to home. I did know some other people who did contract it, did recover, and this person is recovering, and his wife, unfortunately, his mother is not doing too well. And they traveled through Italy and Europe substantially in the latter part of last year, and I'm sure that has something to do with it. So, so life goes on, right? And here we are. So, on that note, let's start. So let's get off the headline screen here. You're seeing part of the setup right behind you for newer members, and these are my eyes and ears to the world of US financial markets. All right, and that little thing here, this picture was taken last year, obviously, well, not obviously, but is one of my cats who used to love just sitting lying in front of the screens. He no longer does. I think he's bored with the volatility, and so that's the way it goes. All right, so I hope you all had a chance to review not just last week's, but last Friday's charts and everything that was going on. We are going to enter a period of significant volatility going forward. I'm going to explain all that, and we'll and now we're going to get into the chart. So anyway, so first and foremost, as I'm setting up the charts, some significant. Please, somebody, please mute the microphone. I'm getting a lot of background hits right now. A lot of hissing noise. Please mute your microphones. Very, very difficult for me to speak. Again, please, everyone mute their mics or else I'll. Okay, I'm going to mute everyone because I'm getting a lot of background hit from somebody's microphone. So please, got to do it. You got to have control over your mics and your things. All right, that's better. Let me see. All right, people can still hear me, so that's fine. All right. So some significant developments over the weekend. Okay, first of all, let's start off with the economic stuff. Berkshire Hathaway, Warren Buffett. Warren Buffett had his annual shareholder meeting, announced his numbers. They had a loss of $50 billion. Obviously, insurance companies, airlines, big hit. He has sold a significant amount of his airline stocks, significant amounts. Now, that's not saying that, okay, it's all over, but that means, and that means that at least for the short term, maybe, depending on the chart and stuff, and unless we have a resumption in airline traffic, airline stocks are out of bounds. Because a lot of people out there will be dumping their airline stock starting tomorrow, because he basically said it is going to be a completely different world, and he's not completely out, but he's out a lot. Okay, so number one. Number two, and I'm talking to you about some market negatives here, which we have to take into account. He says he doesn't find the market attractive enough to buy companies. Very good. I mean, there's a lot of companies which are substantially lower from where they are. A bunch of them have bounced up a lot from where they were on March 23rd. But he said he doesn't find any attractive entries. I mean, acquisition targets. All right. In the meantime, you're seeing the actual E-minis in play. Why do I have wind here? I don't know. Okay. I think wind's going to is going to be a nice bouncing candidate because Vegas is going to open up soon. So initial pop on wind will be nice. So this is your E-mini futures. What's going on? I'm going to explain all that. I did explain in my previous webinars that when we hit certain points, we are going to, and we did hit that point, okay, pretty much. We didn't quite get to 3,000, but we got to that level 2964 or so, where I said we're going to see a pullback, and that's exactly what we're going through. Anyway, so Warren Buffett was somewhat sanguine and negative about the short-term prospects of the U.S. markets. Number three, we had a escalation of rhetoric from President Trump on the China disclosure or transparency of the origin of the coronavirus COVID-19 crisis. We are now directly, at least on a verbal war. We have started a verbal war with China on the coronavirus issue, which I talked about pretty extensively. Just my opinion, I blame them for not shutting the wet markets, which is where the origins are. You can't be eating dogs, bats, not cats, thank God, rats, and other exotic animals, and say, hey, nothing's going to happen. There are animal to human transmissions, and that is exactly why we are in this mess. So the fact that they shut the wet markets later and then supposedly they're reopening again is a travesty. So President Trump is now, with the aid of the U.S. intelligence services, and there were significant reports on that they are saying that it came out of the Wuhan lab. More importantly, the wet markets and all those wild animal markets, which in my opinion should be completely banned. I mean, it's horrible. Doesn't matter if that's a tradition or not, you got to shut it down. So the political rhetoric has now entered that phase. Now, what affects us from a market standpoint, and you're seeing the futures here down 42 points, about 43 points, and in my opinion will go a little bit lower before it bounces, is that President Trump is now attaching this particular coronavirus issue with the U.S.-China trade issue. So here we go again, right? We went through the whole trade issue for a year and a half. We managed to come out of it. There was a trade one phase deal, which is supposedly still in the works. But again, at least for the short term, at least on a rhetorical standpoint, and from a political standpoint, it is now in play. So all these are negatives on the short term for the market. Then we had pullbacks on certain tech stocks after earnings and all that stuff, and they are tied in with the Chinese supply chain. So we have a little problem, and that little problem is something that I talked about in my past webinars, that we're going to hit these spots and we're going to pull back from 600 to 1,000 points. Does anyone remember that? That was a question. Does anyone remember
Yes.
that? Exactly. Thank you. And that is standard procedure. It doesn't mean we're going into a bear market. It does not mean we're going to test the lows, but it certainly means that we are going to come in for a quick, fast pullback, which is going to scare the living daylights out of non-tactical emotional traders. All right, just letting you guys know. That's trading. Now, what we're going to try to do, and that's why I asked you all to take a very good look at, and I'm sure all of you did, on the Friday charts, that we have hedges, SPY puts as insurance policy. We have limited longs. We have selective longs. And we're not going crazy saying, okay, that's it. The market's going to go all the way up here towards 3,100, 3,200, which will happen once we have a big collapse on coronavirus cases in the United States. The reopening of many states will have a successful outcome, that we will not, hopefully we do not have a spike in coronavirus cases, infections. We do not have a spike in deaths. And if those things fall in place, and we do not have a full-scale escalation or a tariff, again, increased tariffs, or all that stuff with the U.S.-China trade relations, then of course the market will bounce up and take out the 2965 and hit that 3,030.20 level. But we have to take into account the reasons that I just explained. The markets don't do our bidding. They are not our slaves. We are the slaves of the market, and we have to fight to make money. We have to fight to make money. We have to look for opportunities. We cannot just say everything goes up and down, everything goes up because the markets are up, which it certainly doesn't. And you guys know that. We have to be selective. I try to be as selective as possible. Most of the times I'm very successful, and on certain days I am not. So that's just the nature of the beast. So as traders, you all need these skills. Now, what are the skills? The first skill is that you need to be focused. Discipline. You need to be focused, number one. You need to know what's happening. If you want to make some fast money, you better be glued to the screen. Okay? Number two, you have to discipline in the way you take profits, get out, scale in, scale out, dollar cost average, and that's it. The trade management positioning side. You have to do that. There's nothing I can do to help you with that. Okay, I try to teach as much as possible, but if you are not practicing those skill sets, then you're going to lose money. Okay, you have to understand the technical features of charts. You have to know that short-term charts can pull back 600 to 1,000 points, does not break the back of the market, as I'm going to clearly show you tonight. You also need speed. You need speed. You need speed to react to changing market conditions and volatility. This is the biggest problem that traders have, mostly out of their own making. If you're going to trade fast stocks, the Netflixes, the Teslas, the Apples, all those type of stocks, and many other tech stocks that we trade, you need speed. Reaction time cannot be delayed. So if you don't have speed, don't trade those stocks, or don't trade that day. There's nothing around it. If you don't have speed and you don't know how to handle volatility, then don't trade those type of stocks. You can do swing setups and many other stocks which will eventually go a lot higher, whether they be biotechs or selective tech stocks, or any other type of industrials or restaurant stocks and things like that, food stocks. Okay? So I hope all of you understand that part.
Yes.
Yes, no,
Yep.
maybe. Okay.
I do.
Okay, good, good. Trading is a process. It's a process that you can learn from the best, and I'm certainly not the best. Okay, I'm very good at what I do, but again, I don't know who the best is, because the best guys in the business are the ones who are not making a single dime in the market overall, because they don't know how to handle this type of market. So, yeah, and that includes people managing $30 billion, people managing hundreds of millions of dollars, and professional trading services who just either are all into that all or none phase, like, oh, we're going to go a lot higher, or we're going to completely die and do a retest of the lows. So there's like no in between. We're the in between guys. We try to attack the market on a daily basis. We put the forecasts out, which have been almost 80% to 90% plus correct, if in some cases 100% correct, as in the forecast of what the markets are going to do. I'm going to attempt to keep on working hard to help you guys with that. But no one can teach you how to trade. That comes from trading your own stuff. All right. No one can teach you how to attain the skill sets. No one. It's like you go into a driving school and you say, I want to drive a car. So they give you a 4-week driving lessons. You go, you get a license. And that's what we do, right?
Right.
So you get a small car, so it's like working out fine. Then all of a sudden, you come into some money, you're like, that's it. You get a Porsche 911 Carrera 4, okay? Next thing you know, within a couple of days, you crash that car because you don't know how to drive that car. So that's what volatility trading is all about. So you have to know. You just learn from your own. That's just the way it is. And in Clueless Trading, we're a no BS, no fluff, no garbage type of service. So we're just telling you the way it is. There's no way around it. You have to learn how to drive your car, and especially on twisty, turny roads. Well, let's say you go up on a mountain drive, wherever you are, beautiful scenic roads, and it starts to rain or snow. Well, your driving skills need to be very fine-tuned, or else what do? You pull the car up on the side of the road or on a service station, and you sit there till the weather gets better. Those same principles apply in trading. You don't have to trade every day, and I hope all of you understand that part. All right, so now we're going to get into the technicals, and let's start off with the daily chart. This is the daily chart of the U.S. financial markets. This is the real actors behind the scene. These are E-mini S&P 500 index futures down about 35 points. We were down about 50 handles on the S&P 500. We're actually climbing back up 35 points. Anyway, I don't know if you call that a climb, but we recovered 15 points on that. So anyway, so here is where we are. Let's just set this chart up, and then we're going to look at the other ones, which are more, which we have explained thoroughly, and that's on investing.com. Okay, let's see here. This is, to me, it is, these charts are very methodical. They're very clear, and I want you guys to understand that. So in order for you guys to understand that, I'm going to ask you guys a question. What is this pattern? Anyone, just step up and answer. By now, you guys should know it. Well, many of you, not the newer members, they're still getting used to it.
That's a flag.
That looks like a flag, right?
Right.
Exactly. Yeah, looks like a flag. Yes, it is a flag. This not looks like a flag, it is a flag. And here's the reason why you said it's a flag. This was the first flag. Oops, sorry. Who's that, Franco?
Yep.
Okay, good stuff. This was the second flag. And all these were multi-100 point pullbacks. And this is the big flag, and we are undergoing that pullback. So if aside from Franco, now this is a flag, and we have now fallen below this uptrend channel, which the dotted lines are. We're moving within this channel, so that's a negative. Now, you all did review the Friday charts, the Thursday charts. More important, the Friday charts.
I did.
Okay. So aside from you, what was one of the things I said in the Friday charts at the earlier part of the day and the middle part of the day? The reason why we put the SPY puts in play, that we were the stochastics, the underlying thing. I'm not going to wait for answers, because if people don't know, don't waste my time, don't waste your time. Okay, that this was crossover down. When you have a crossover down, doesn't matter if the markets try to rally during the day, it's going to fall. I knew the markets were going to be down on Monday morning, and within 24 to 48 hours, once we reset, depending on how fast we reset. In fact, on Monday morning, I want the markets to be down 700 points. I'll doubt if that happens, but hey, I want the futures to be limit down. I don't think that's going to happen, but I'm just saying. Why? Because then the resets would be complete, and we're going to look through it in the form of charts, and that means another big buying opportunity after we take some very fat profits on the SPY puts. So if you're relying on looking at the market through the lenses of just price fluctuations on the Dow Jones Industrial Average, S&P 500, Russell 2000, NASDAQ 100, and other indices that you follow, or ETFs, whatever, whether it's XLF and of course the famous VIX. If you're just looking at that and not looking at the chart patterns, then if you're just looking at the price movements and not the chart patterns, then all you're doing is shooting yourself through the head. I don't know how clearly I can say that. So, saying all that, do you guys, now that we identified that it is still a bull flag pattern, first negative. This was your uptrend channel from March 23rd, which we identified, which we traded, which we profited from. We also bought around here, profited from that. We also bought around here, we profited from that. We are currently on the hedge side net short. So if that's the case, what is the next? Where do you think the market should, from a technical standpoint, bounce from? Somebody else please answer the question.
The 273 area.
First of all, I don't see 273 anywhere. So please focus and give me a correct answer. We're not looking at the SPIs. We're looking at the E-minis. You're correct, but you just gave me, what area?
2000,
736.
2736.25.
That's correct. That's correct. Exactly. 272 would be on the SPY side. So bottom line is somewhere around 2700. In my opinion, the market, this is your downtrend line, and Zach is correct. I hope you guys understand that. Should be, technically speaking, 2700, even a slippage below a couple of points, because generally when the market starts selling 600-700 points, there is a large element of fear. Stop limits get taken out. All kinds of stuff happen. Margin selling, so it slips lower. So let's clear this thing out. Let's clear this out. See, we still have the pen. Good. So bottom line is that this level between 2658, 2700, 2736, which is the retest of this large downtrend line, okay, should bounce the markets. If it doesn't, I can assure you we're going to fall a lot lower. Now, that is not showing up yet on the weekly charts, but if it does show up, you can rest assured we'll drop another 2,000 points. It could be for reasons I just explained, a resurgence of coronavirus cases as states reopen, more people getting infected, deaths, more hospitalizations, an escalation in the US-China trade war, not just the rhetoric, an actual, tariff situation, phase one trade deal, which was one of the biggest successes of the Trump administration, postponed. China taking retaliatory action. All that would basically bring us down to these levels: 2400, 2500, 2600. we certainly don't want to. If we go below 2,500, you can rest assured we're going to retest this lows again. So I'm not even going that far. So initially, we have a where futures are, I'm not going to say only, but still, they're actually down only 30 points. 30 points doesn't break the back of a powerful resurgence, a reflex rally. So you guys have to look at this stuff. You guys have to understand it. You all have your own screens, and you can certainly see what I'm talking about. Now, these are the moving averages. The 50-day moving average is coinciding with 2730. If we drop another 2790, 2730, okay,
60 points.
60 points, 60, that's another 500 points from here. So that's a 500 point drop. That is very likely, if we don't bounce. Now, the other thing, this is all technical stuff, okay? Just keep your emotions aside, keep the TV off, you know, and just put the demons back in your head. This line is the blue line. This lovely blue line is the 20-day moving average, ladies and gentlemen. A close over the 20-day moving average or an opening above that at market open tomorrow would be considered to be a technical win for longs, even though we're going to be down. Okay, so if we close above 2,800 over this line, because this line is still trending higher in a sharp pace, the 34-day moving average, because of all the massive short covering and new money that went into the market, creating a double barrel bearish candle rollover. That's a bearish candle, okay? Even though it's within the body of this candle, which was on what day was the 30th? The 30th was Thursday. So this was 29th. This was Thursday, and then Friday. So these are all negative. This is a negative pattern. This is a short-term topping pattern. So now we went below the 20-day moving average, and that 20-day moving average is close over 2,800, means that there will be an immediate mini short covering, which will try to take us above the close on Friday, which was 2811, around that level on the E-minis. Now, the yellow line here is the 5-day moving average. This we have to keep an eye on. Many short-term, many traders who are looking at short-term directional movements in the market, they track the 9-day moving average. They track the 8-day moving average. I track the 5-day moving average. Okay. There is no priority with what you follow. Can somebody tell me, aside from all the members, just use simple logic? Why do I use a 5-day moving average? And if you know the answer from being with my service for a couple of weeks, couple of months, don't answer. I want other people to answer. Why do I use a 5-day moving average, Ian?
I'm thinking it shows the volatility better in the past few days.
Well, you're answering the question in a very professorial way. Just think about it simply, like when you're having a couple of beers out there in Melbourne, Australia. He's from Melbourne, by the way, and hopefully you join us as a member. You're going to learn more about the markets than anyone can ever teach you, okay? Because your free trial's almost over. The bottom line is, how many days are there in trading days in a week?
5. So it shows
That's all. The 5 trading days in the week. That's why I use the 5-day moving average. Don't overthink this business, all right? Just stick to simplicity. So yes, so that's the reason why I appreciate you at least answering. So that's why I use the 5-day moving average. Now the 5-day moving average curvature is doing what right now, guys?
It's going down.
Exactly. Because it will track the more recent developments in the market, just the way it started to go down here. All right. Now, just because it's going down doesn't mean the market's going to have a 400, 500 point rally as we saw on the 22nd of April. It was still going down. It was still going down till the 24th. Okay, from this point. But we could have one of these massive green candles right here as early as tomorrow, if not by Tuesday, depending on how much we get oversold and depending on the news flow that's coming out from there. For coronavirus, primarily, number one, the market is more concerned about the overall overall results of the U.S. economy opening up, and then secondarily, of course, the political ramification of a escalation of U.S.-China trade wars. So, but more to me, what's more important is the overall results coming out. Like, okay, was this a success reopening parts of the U.S. economy, which all that stuff. So I think that'll take precedence over the rhetoric between President Trump and China. Okay, so saying all that, this has turned down. This is still up. The 34-day moving average, which is a longer moving average, is still curling up, and the 50-day moving average is still tracking downwards. So a retest of 2,700 to 2,725, which is a good solid 500 to 600 points from here, would be fantastic, if you ask me. Okay, because that'll bring down prices on a bunch of stuff that many retail emotional traders never bought. So they'll have a second chance to buy them. And this time we know the companies, because we're in earnings season. We now know the companies which are delivering their results, such as one of my top companies that I highlighted, and I'll show the chart again, which I think will go a lot higher. They had their best quarter ever in their history. And the stock zoomed forward. And we were swinging that stock for months now, if not for multiple weeks. And that stock is Service now. And I told you guys to buy it. Okay, exactly. So if they had their best frigging quarter in the middle of this massive global crisis, what are they going to do when the business actually stabilizes? Think about that for a minute. It's amazing. Those are the type of companies we know, now that we have a measure of it, are the ones we want to get in and pile in and make shitloads of money. Let me correct myself. Crap loads of money. Just kidding. All right? So bottom line is, we now know the measure of what these companies can handle themselves in that. And so, okay, so that's basically it. So the chart is not devastating. And let's take a look at the internals right now. We don't want to hammer on the externals. Remember, this is your external view. This is your internal view. The internal view says lower. It's just clear as day. So yes, we will have reflex bounces within 24 to 48 hours, but unless we go back over 2940 on the E-minis, give or take a few points on the S&P 500, they track each other, obviously, it's the same asset class, over 2930 or even over 2960, what the previous high was, well, forget that. If we re-enter this channel, we have a good shot to get to 3000. Can it happen? Absolutely can happen. But point is that the internals on the daily, on a swing basis, are telling us that the markets want to go down for a couple of days. There. Now, will it come down and retest this? If you ask me, I'd love it, because that means we're going to buy a lot of stuff real cheap again. Because remember, traders have two problems. They don't buy when we are at tactical lows. These are all tactical lows. And they're completely shit scared to buying when they're running like crazy, because it's too tough to catch a very fast moving train. Has anyone seen the movie Train Spotting? It's an old Scottish movie. Old meaning like it's from the 1990s. What's train spotting? What's train surfing? Anyone know train surfing? Train spotting? Okay, you don't.
Yes, I saw that movie with my daughter.
I knew that Mike could come to my rescue, because Mike is a reservoir of unbelievable knowledge. Train spotting, you go on top of the trains. In Brazil, they do it a lot. And you kind of surf the train as it's moving at high speed. Well, it's not a very helpful, and it's a very healthy sport. It's a risky sport, because you can get your head chopped off when you hit the next pole, or you go into a tunnel, right? So the bottom line is that traders have two problems. They're so terrified. Hold on one second. They're so terrified. Sorry. Bear with me one second. Yeah, so they're so terrified to buying, when we are basically buying hands down, which we do at certain times, and of those lows, and they're totally scared of jumping on a fast moving train, what we call high beta momentum trading. And so obviously they like I say, you can't, most traders can't make money in bull markets or bear markets. So what do you do? So just passing it on to you. So looking at these internals here, we are not that extreme oversold. These are extreme oversold conditions, where on the full stochastics we are like, down towards 10, below 20, and we'll get there. I mean, if we break down back towards 2658, we should technically have a reset down here, which will be buy short term, because we'll get that immediate reflex bounce on the daily, which will last a couple of days, and then they sell again. That's just the market. The market is not a one-way train up. It's not a one-way waterfall down. In between is where you make the money. I hope all of you understand that by now. All of you have gone through significant, especially my member who has been with me for a while, by now, accept volatility. Accept volatility. It is uncomfortable. It is painful at times. It is absolutely joyful at times if you buy tactical lows and sell them, like we say, shooting fish in a barrel. You just don't know where to take profits. Okay. But if you don't embrace volatility, this market will every day, you'll die of 1,000 cuts. Technically speaking, not die. Okay. As a trader, you will die of 1,000 cuts because you don't look at the VIX, and we're certainly going to look at that, and you don't follow the technicals. That's all. All right, so that's the daily chart. Now, on the weekly, we have, where are we? Okay, so that's your daily. We're still heading down. That means that any short-term bounce, even towards the 5-day moving average, which would be a pretty substantial bounce of almost 100 points, that's almost a 600 point, almost a 600 to 800 point move on the market, will still not completely negate the downward slope. Okay, so that would be a sell the rally type of mode. Buy the technical dip, sell the technical rally. So that's the mode we're in right now, just so you all know. At least for, let's see what happens, at least towards for the next week or so, because things are going to move really fast. Let's take a look at the shorter term picture. One of the closest things to the daily, which might propagate a short-term short covering rally tomorrow, is the 4-hour chart. Please follow it, guys. The 4-hour is the first cousin of the daily. It is the trader's friend. Right now, the 4-hour looks like what? And who's Mo Profits? I like that name, Mo Profits. Sounds like Eddie Murphy in a new version of, what was that great movie they made? Trading Places. So they go, Mo Profits, man. Let's trade places. Let's do it, man. Let's do it, technical trader. All right. So what is the 4-hour chart telling us? Quick, guys, quick. What is the 4-hour chart telling us? Mo Profits. Okay, none of you will answer.
Sorry,
So
man, but my screen is all screwed up. Broke today.
I'm sorry to hear that. You know what we say? Get a new screen.
I need to.
Yeah, like the Amazon selling screens like no one's business. You can buy these 40. I mean, I use like I have 30-inch screens and mostly 23-inch screens, 24. I really need to upgrade. They used to cost like $300, or they cost $60 now. 60. Okay, 60. $70. So get one. All right. So aside from you, does anyone see what's going on here on the 4-hour chart?
Yeah.
Yeah, the stochastics look oversold.
Totally oversold. So that means we could get a short-term pop as early as tomorrow when the market opens down. If the market opens down, the market's down 33. It's not the end of the world. You never know. So yeah, very oversold. So there's a difference between this and the daily. The daily was pointing down like this, and this one is saying, hey, It's okay to buy me if you're a fast trader.
Right.
So exactly. So the 4-hour chart is something which I've always told you guys that track it. The daily chart generally will not make you money. It'll give you a picture of what is happening. What will make you money is the 15-minute, the 1 hour. I don't use the 30-minute. Anyone can. And the 4-hour. That's it. So the 4-hour is basically giving us a buy signal here based on the internals. Let's move on. So right. So if we do this, and the 4-hour McClellan oscillator is also giving us a buy signal. It's at minus 138, like as of now, because this is a live chart. Because once you get towards this level here, like minus 200, it's like buy hands down. And you guys have heard me say that many times, while the rest of the other great trading services you follow, or other people you follow, or the little demons in your head you follow, will tell you, no, you can't touch the market. You can't touch the market. This is really dangerous, you know. Well, we say no, buy the market hard, because luck. Now, we're not quite there yet, but minus 138, yeah, good enough. That's why we still have some longs. Okay, right there. I can slip and slide a little bit before the open. I think it will. Europe opens around 4 in the morning. So we'll get a burst of selling in Europe. But generally, when you get this low on the McClellan oscillator in this zone, you get oversold. Some of the stochastics on the 4-hour. You get a bounce. Can make these things up. Look at that. Each candle is 4 hours. How many 4 hours are there in a trading day? How many 4 hours are there in a trading day? Ladies and gentlemen, this is very important.
Two.
2, right? Roughly 2. Correct. Exactly. That's why the 4-hour chart is very interesting, because you can see these 2 bars. It's showing you some tricks here which work 100% of the time. These 2 bars means the first half of the day and the second half of the day. If you see the second half of the day very green, you want to basically take a good portion of your profits in your pocket and leave some longs there. That's why I say take full or partial profits. That's code to say get the heck out of things that you're seeing some very nice profits on. Put some money on the side. When you see very large selling, like 2 green things, generally speaking, that means the market is going in a capitulation mode. In other words, the heavy selling. And this was Friday. You saw 2 of them. If you look back for the last couple of weeks, this goes back to almost the beginning of April. Every major capitulation means where it's just like sell, and your automated sell programs are in full gear, like it was on Friday on most stocks. You know, somebody say, oh, because of Amazon, you know, because of this or that. Oh, it's preceded by a reflex bounce. Let's look at that. The job of being a technical trader is to look at signals, and not just signals that are presenting themselves right away, because you might be too late to get into that trade at that point, but signals that what we do here very well is predictive analytics. So we are basically doing in the business of crystal balling. Okay, that sounds kind of weird, crystal balling. So let me change that word. We're in the business of predictive analytics and figuring out a crystal ball to figure out what's going to happen. Most of the times, very large capitulation type of selling is preceded by a rally.
Right.
Look at that. Look at that. You know, there's an old saying on the business, right? On Wall Street too. Traders lie all the time. Charts never lie. I say charts lie. They lie a lot. Okay? Because volatility makes charts so, you know, if you don't understand the patterns and all this, even then it's hard. They skew the charts to a level where charts lie. Just because something looks like it's all over, boom, then it goes higher. So nowadays, you can say traders lie because we're humans. Humans are born liars, generally speaking. All of you know that. I know that. So what do you call? But our charts, the tactical charts with the patterns and stuff, they never lie. They always give some sort of signal. Question is, how well are we reading it? So most regular charts will lie. So look at that. Every one of these big sell programs have preceded a mini rally. So now you know. Let's move on. Everyone with me so far?
Yes. Yeah.
All right, good. Good. Ooh. Let's take a look at the shorter term picture. Let's look at the 1 hour. The 1 hour is also pretty damn good. Now there was people look at volume and they ask me, hey, does volume matter? Volume always matters. It always matters. But volume can be also very tricky because there's a lot of spoofing that happens in the market. What is spoofing? Does anyone know? And this is primarily generated and unleashed by algorithmic high frequency trading supercomputers. They spoof the market. What does that mean?
They basically lower the market so small traders get out.
Okay, you said the answer in a very like convoluted, complicated way. They basically trick the markets. Okay, spoofing. So they basically will throw out an order to buy 100 shares, and then immediately, if they see the reaction to that, they'll go and sell 1,000 shares and make some money. They are lying. They're basically it's borderline illegal what they do, and the SEC still hasn't stopped it. You know, what's his name? The gentleman, not Carl Icahn, but the other guy. It's going to come to me in a second. It's been a long weekend. So Lee Cooperman, you know, Omega Fund. So he is so against it. He's written letters to the SEC. This guy is like a big shot, right? He says that's the biggest problem with the stock market because these algorithmic high frequency trading programs, which I have said it too, because I've seen it happen over and over again, they are complete cheaters. Their business is to rob your money, period. And there's a lot of them. They're like viruses on the market. Let's put it this way. They want to get into you and get you sick, mentally sick, so you sell everything and then they just take it and run with it, both on the sell side and the buy side. So the bottom line is they spoof the markets. So that's why the volume is not that, you know, it's important, but not that important, because in the old days, you could just track price and volume in order to make money. So nowadays, there's a lot of lying, a lot of, you know, fake programs that go through, enhance the volume, drop the volume, all kinds of stuff. So that's why I look at volume, but this volume was great at 3 p.m. on Thursday. What happened in the market? It actually went down. This volume was great at 3 p.m. So somebody looking at volume say, wow, look at those E-mini contracts been bought, 290,000. That's a lot. Futures are down, climbing higher though. Futures are only down 30 right now. They got back like 20, but still, so not that. So I just wanted to give you guys a little heads up. And the same stuff in many ways happens with stocks too, but more so on the E-mini future side. So saying all that, let's take a look at the internals on the thing. 1 hour chart. It's been oversold since Thursday. It's been oversold since Thursday. So might get a little bounce. So by the time it gets up here on the 1 hour chart, you know, it's time to sell some of the cheaper things that were bought on Thursday and Friday. Let's move on. And oh, wow, look at this. I didn't even see this. Does anyone see the McClellan oscillator? 1 second here. I just saw it before I was leaving the screen. I didn't realize this. Wow, it's at minus 815. Oh, that's like hands-on, you know, hold your nose and go some cliff diving here and buy some stuff. Look at that, minus 815. When was the last time we saw that on the hourly chart? Let's take a look. Here, let's take a look here.
I can't even see the bottom of it on your screen.
Well, that's your problem, not mine. I'm just kidding. Does everyone see the bottom of my screen? Because it's pretty clear on my side.
I can see it.
Yeah, that's a problem. Yeah, that's a problem with your screen, not mine. That's why I said get some better screens?
Not bad. I got it now.
Okay, good. Thank you. When I kid around with like that, I'm half kidding, half serious. Like if you're going to look at these fantastic webinars, they're going to make you shitloads of money going forward. Look at stuff on a bigger screen. You know, that's what I want you guys to do if you want to do it. Because what makes money as a technical trader are these lovely big screens. If I was trading off little 6-inch screens, like sometimes I'm posting off my iPhone because I'm not on my desk, and even then the I think the iPhone XX Max has a what, a 6.5-inch screen or whatever. I don't know. Apple's high time they bought me a big screen on my phone. But anyway, so if you're gonna trade off, like if I would imagine doing these webinars with like little 6-inch screens, I think we'd be all in deep trouble. Like in real deep trouble. So screens do matter because they're the eyes and the windows to looking at these things, which will make you some serious money. So definitely all of you. If you, it's mostly like I said, we're still stay at home, right? Well, I'm stay at home anyway. But the thing is, but you guys are staying at home. One of the things I forgot to mention to all of you, do you realize how much time you have in your hand right now to learn this business? And really, when things normalize, which it certainly will, no question in my mind, where you don't have the luxury of sitting at home and you just have to be trading off your iPad or this and that. What a difference what a gift that this stay at home is for all of you to learn and to trade and make money. So get some friggin' big screens and make use of this time. Because when the economy opens stuff, it's almost 99% of you out there. So use this time. This is the time to learn. This is the time to make some money. This is the time to lose some money. So what is losing money? It's just another form of learning.
Right.
Exactly. So bottom line is use this time that you have when you're sitting at home during trading hours. It's a gift. So anyway, let's get into this. So bottom line is every single time we get to, wow, minus 815. This was minus 600. These are the McClellan oscillator.
Hey, Frank.
You get 1 second, Paul. Let me just finish my thought. You get a sharp move higher. You get a sharp move higher. Yes, Paul.
I was just wondering if you can go back in time a little bit more to the low of the market so far on March 23rd to see what the McClellan oscillator was there.
Yeah, we can go back. I can do that on the hourly, but I can go back on the daily, and let's take a look at the McClellan oscillator. It was down. It was pretty much. It was minus 400. So the McClellan oscillator will be different at that time because every time frame that you're looking at, you have to look at the McClellan oscillator during that time frame. So when we look at the daily, which is a better way of looking at it, if we are looking back at March 23rd, this is what it looks like. It's a very good question. So do I have my pen? Good. So this was the time that the market bottomed. The McClellan oscillator on the daily meant to minus 400. And I screamed and shouted, listen to my videos. This is unheard of. And I gave so many reasons to buy the market at that point. It's not even funny. Some of you did, many of you didn't. Not my business. Okay? It was huge. It was huge. So McClellan oscillator shot up. And this is every action has an equal and opposite reaction. And may I present that to my great audience here. We went to minus 400. We went to almost plus 400. Here's your zero baseline mark. This is almost 400. Okay, to be exact, this is the reason why the markets pull back. Minus 366, good enough for 400. And please follow if you don't. Here's your zero baseline mark. This was minus 400. Unheard of. We went up. So this was minus 400. You don't have to think at those points. You just have to buy. And 99.9% of people don't. Okay, fine. That's not my problem. So this went to plus 366, which is as good as 400. Every action in life, I didn't say that. Sir Isaac Newton said that. The guy who was sitting there and an apple fell on his head. It wasn't an apple. It was actually an iPhone. I'm just kidding. So bottom line is that, bottom line is you went down minus 400, you went up plus 400. That is what we call an equal and opposite reaction to the exact order. Are you guys with me so far?
Yep.
Exactly. So it's no rocket science that the market pulled back. I even mentioned that in my previous videos that we're going to come in for a pullback. And I showed the other charts will clearly show that. We're going to revisit that just to remind you all what we talked about. So saying all that, but the market will make a big deal about it. Oh, of course, you know. So bottom line is, let's look at the McClellan oscillator. And thanks to Paul again for bringing this to my attention, which he in fact is helping you. So everyone should say thanks, Paul. I'm just kidding. Yeah, you should. So bottom line is, what is this McClellan oscillator? This is now a little bit of a topping process. It got very severely overbought. So technically speaking, it should come down somewhere slightly below zero, because you can analyze the internals also via chart patterns and stuff. Here was a triple bottom move. Here's a triple top move. Okay, this triple top, by the way, started off back at the end of March. That was a long time ago. So technically speaking, there is no harm in the McClellan oscillator resetting a bit and coming down towards zero, which will, what futures are only down 29 right now. So we have gained back 21 points, almost 160 on the Dow, if the Dow futures, if you look at it that way, up from the bottom, just within the past hour. So, okay, so we would come down here. So is everyone with me? Do you see the pattern symmetry?
Yeah.
Exactly. It's very easy to see. Very easy to see. All right, let's move on. Let's try to cover some quick things as we move on. Paul, does that answer your question?
Yes, thanks, Frank, and thanks for showing us the 1 hour. Looks oversold
Yeah.
there on the.
Yeah, no problem. And then the 15-minute, we got as oversold on Thursday. On Friday, we were actually climbing higher. And by the way, I have so many unbelievable charts, which I'm not going to bother showing right now. It's all on my Twitter feed on Friday. Okay. From the quad algo HFT thing showing the bottoming of the slow stochastics and all that stuff. Please feel free to, review them. I even write comments to make it simpler. So let's get out of this picture here. Let's take a look at the weekly before we go. This is what's dangerous with this market on the front end. That's a serious inverted hammer. I talked about it. Forget about talking about it. I put it on my Twitter feed. This inverted hammer is no good. It's not bad, but it's not good. And this inverted hammer is coming off the weekly 50-week moving average almost. This was bound to happen. So now what we have to do is from a candlestick standpoint, we have to see, here's the body of the hammer. It's 2831.96 right there. We need to, and remember, the market is 110% algo HFT computer driven. They are following most of the times the markets are obeying my charts. I'm not kidding. Somebody say this guy's nuts. I'm not. It's just a way of me explaining that. Okay? Because they are exactly following all these levels and numbers. You think the market moves on news? Come on, give me a break. How many times have there been bad news and the market's gone up 600 points? Okay, of course the news in the background is important, but that is after the fact. They'll first get to your predetermined destination and then figure out why it happened. All right. So as a technical trader, we try to I'm telling you exactly what the market needs to do. The market, this is an inverted hammer. That is one long wick. Massive selling. Massive selling. So the bottom line is 28.28, call it 28.30. If we can recapture back the body of this inverted hammer, the market is going to shoot higher and retest the 28.86. This is on a weekly basis. And this is what is happening tonight. This is at 6 p.m. when the market Globex futures started trading. We were at 27.71. We have recaptured back 20 points of that. And that is a very nice looking green, long-tailed hammer, which is very bullish actually. So futures traders who know how to trade these candles might have gotten in around here and made 20 points on that. That's pretty nice. We just probably, went home and you just said, what the hell? I don't need to trade tomorrow. I just made 20, 20 handles on the E-minis and put in some size money. You're done for the week. Exactly. Now, what's happening on the internals? This is very important.
Actually, you've made 20 points since you started talking, Frank.
Who made 20 points since I started talking? Any one of my futures traders, they probably did. Who did? No, Mike. Okay, don't worry about it. So internals completely untouched. No technical damage whatsoever on the weekly. Short-term volatility, intermediate term, market's going higher. Unless this starts to turn down, in which case, see you later. It's going to be short, short, short for a while. So none of that is happening. Still a bull flag, and internals are still good. That's on the weekly. Let's take a look at the monthly. The monthly is dangerous. The monthly is telling us we don't know yet. That's why speed is important. That's why you got to keep an eye on the charts. And if you rely on this notion that, oh, yes, definitively second quarter and the third quarter, second half of the year is going to be great, you're being stupid. Money is not by politicians don't make you money. Strategists, the big shots who come on TV don't make you money. Okay? We try to make you money as much as possible because we're focused in these things. And the talking heads on CNBC certainly don't make you money, or any other financial network. They certainly don't. All right? Most trading services don't make you money. So key is what's happening with the monthly. The monthly is basically a mixed signal. It is starting to turn, but the worm still hasn't turned yet. The percentage K is still moving down. No good. Still moving down. The internals are severely oversold. So that could be looked on as a positive. But if they go to minus 400, that means the market truly has created a significant bottom in place. But the markets don't know that, because the markets don't know what's going to happen in 3 months' time. Markets don't know if there's going to be a resurgence of coronavirus cases and another lockdown. So markets don't know that. The externals are pretty good. Externals are pretty good. We're attacking the 5-month moving average right here. Let me take this line out. Let me just clean out this, clear this drawing set out. Okay, perfect. So look what we're doing. The bears will look at it like this. The bears will say, as you hear them say all the time, this is a bear flag. Fell? See that? The bears will say it's a bear flag. And they might very well be correct, but it doesn't matter. You could make a crap load of money just trading the bear flag when it's moved higher. The bulls will say we are just about to break out of the bear flag. That's how perception of life is. I say I have no clue what's going to happen on a multi-month basis. Okay? Because if this bear flag is broken out, massive short covering. The markets will take out the highs so fast, heads are going to spin. Do I think that's going to happen? I don't think so. That's just my opinion. Okay? I think it's going to take a little bit of time, but multi-month basis, we shall see, one step at a time. So that's where we are. And we are at this level here where we can easily slip back and retest the 50-month moving average, if you want to look at it that way, and that's at 2,600. Why not? 2,600 means that we're going to drop another 230 points. We're going to drop about 1,700 Dow points fast. Let's do it. Because why do I say that's a very critical a very critical support? The 200-month moving average, okay, which is this. And I'm going to ask you guys the question very simply. Every single crisis that we have had, I'm going to give you the hint, and I'd like you guys to give me the answer. It is a very easy answer. I've explained this before. Since 2018, massive pullbacks, 2-month pullbacks, and the world is ending. Oh God, here we go again, you know, with the rest of the talking heads, you know, everybody like, oh my God, everything's just going to hell in the handbasket. Roughly a 2-month in between. The second month, the market was higher. 3-month pullback. Again, the world's ending. We're back in the caves. You know, there's no virus in sight, by the way, at this time. Okay, this is the Christmas Eve massacre. Credit crisis. We're all finished. The Federal Reserve sucks. You know, Jerome Powell's going to get fired. Now, Donald is going to put a statue of him in the White House. So bottom line is, yeah, remember he used to piss on the thing. I used to get really pissed off, and now he's like very respectful. He should be. should thank Powell for what he did. And he did thank Powell, which is very good and very decent. So bottom line is, and that's Jerome Powell, just in case you guys don't know. You might think I'm talking about somebody else, like, your second cousin or something. I'm not. I'm talking about Jerome Powell, Federal Reserve Governor. So this 5-month moving average trending down. Not good. But it trended down here too. And then the markets went higher. So bottom line is that every single time this type of, and this is obviously was very severe, what we went through. What did these lines do? Just visually look at it. Just somebody answer me. Somebody like who is completely non-technical, what did these lines do through all these major crises or crises? What did these two lines do? The 34-month moving average, the 50-month moving average. What did they do? Does anyone else answer or no? What did they do? They did nothing. They kept on moving their merry way higher. The highways that run the financial markets on a monthly basis did nothing. They kept on moving higher. Even after this big, huge, humongous, the world is ending scenario, the 34 and the 50-month moving average kept on going higher. That's why these lines are of critical support. So if we kept up above 2600, we're okay. We stay below 2600, we're going a lot lower. Does everyone understand what I just explained?
I understand.
Yes.
Okay, good.
Yes.
Now the technicals are mixed. This is sloping down, all that stuff. I'm just telling you the candlestick version and the moving averages. 2629, 2600 is a critical line in the sand. If we break that, it's a completely see you later story. We did. But within the next month, we came rushing back into here. Now we are breaking the 34-day moving average. That means we have room to fall. That's why I say caution. All right. Let's look at this. Our favorite charts. Let's clean this out. Let's take a quick look at it. And then we can talk about a couple of quick stocks. Oh, this week we have the jobs data. The market's going to make a big deal about it. Of course it's going to be bad. I mean, what's new about that? I believe we get that on Friday. I'll find out. We normally get that at 8:30 p.m. on Friday. We'll look at that in a minute. You guys should be aware of that. They're already starting to make a big deal about it because the business of the media, any media, is to make a big deal about things. That's how they make money. Nothing wrong with that. So the employment situation, the jobs data is 8:30 a.m. on Friday. So let's look at our most beautiful charts, the same things that we look at, but a little bit closer. Let's start off with the same things that we look at, the ES monthly. The ES monthly, this is the worm. We call it the worm, right? The stochastics is hitting a roadblock. That's why I say beware. See? The stuff that you're listening to, the stuff that you're understanding, the stuff that you're responding to is what is talked about, like I've said many times, on the 80th floor of Goldman Sachs, of JP Morgan, of Credit Suisse, okay, of Societe Generale, all these great investment banks of the world. And they still get it wrong. And you're learning this here. So the next time anyone wants to friggin' complain to me, remind themselves of that. You're learning high level, hardcore stuff in a very simplistic manner for a puny amount of money every month. Think about that for a minute. And I mean that. This stuff is not even taught in Harvard Business School, HBS, okay? Think about that. Okay, so the bottom line right now is, and a lot of the stuff that I'm talking about tonight, you'll see some of those big shot guys come and talk on the media over the next 48 hours. You'll see. Okay, so when the worm is turning like this and then starts to come down, red flags. Red flags. Nothing really technically changed here. We're still within the body of this massive candle, which is the monthly candle. the month of April. That was the month of March. That was the month of February. So this is the month of March. But you know, I say, hey, let's be careful. I'm talking overall market. I'm not talking about certain individual stocks and this and that. Okay. The other point is the MACD. The MACD doesn't seem to turn. Like, what the hell's wrong? All right. This is on a monthly basis. So that's it negative, and this is a slight negative. And this was last week. So this, even if it comes down here, which I consider to be support, which is 2,700 to 2,725, if this breaks, then we're coming down to the lower end of these lines, which are quite a few hundred points down. We don't know yet. We don't know yet. But if somebody was just relying on these two things, they'll say, yes, if we get a nice little pop, we got to sell it. Unless fundamental reasons change. Strong coronavirus results, no new deaths, all kinds of stuff, more vaccines introduced, and no major escalation of US-China trade war, which will drop the market thousands of points, just like it did so many times in the past year. Okay, let's take a look at the weekly. Everyone with me so far on what I just explained?
Yeah.
Okay, good. It's good to know the bigger picture so you don't freak out what's happening on a certain day. So that's the reason why I explain these things. So pretty. Where's weekly? There it is, staring at me. So what is the weekly doing? Not much. The weekly is basically telling me, this is your weekly chart going all the way back to 2018. The weekly charts on the overall markets on the S&P 500, which dominates the market, is still pretty good. Like we said, it's a bull flag. And you can see that very clearly right there. That's a bull flag with a very large inverted hammer off one of the levels that I had highlighted. And that was actually the high of October 2018. Write that line here. That's the reason why I had drawn that line. Here, this was the high. Sorry, April 29, 2019, a year ago. See this line? Follow this line till you just follow this line. Look what happened. It hit exactly that. I was expecting it to hit, I was close enough, the mid-Bollinger. That's this line, which I talked about in the last webinar. It didn't hit the mid-Bollinger, almost went there. And then, whoosh. The last webinar we talked about, okay, Microsoft was up 15 and stuff. That was weird. It's really weird. Because I had to get out of position so fast the next day, and things were very weird the next day. Some hedge funds, some blew up overnight because, because those kind of things don't happen. And I didn't even mention that. And that was the bizarre part of it on Thursday. Managed to make some money, like 2 points or so on Apple. And what was the other one I made some nice money on? But it was just a bizarre day. So there was some weird stuff going on right at the end of the month. And it's almost like alligators eating alligators. You know what I'm saying? So yeah, really. I don't want to get into that, but something weird happened on the hedge fund side because the next morning they were all red. Like, what the hell's going on? So anyway, so if you look at here, the weekly is there's not really nothing wrong. This worm is still turning. It's almost going negative. Pretty good. I mean positive. Look at that. The MACD about to go positive. This one is still a bull flag with levels that this is the level we're watching, 2,700. Sorry, 2,716 to be exact. This was where the market found the floor. So if we drop from 2,790 to 2,700, that's 90 points. So the maximum drawdown that the markets can encounter very quickly, 90 points times 8, that's roughly 700 points. So the sooner we get a 700-point drop, the better it is. Are you guys with me so far? The
Right.
sooner we get a 700-point drop on the Dow, for whatever reason, the better off it is because we'll be then retesting the lower end of this range and we should be in for a sharp bounce. If we linger around here, it's going to screw both the longs and the shorts. We need a definitive pullback reflex rally, or a definitive move higher to the upper end of the range, which basically tells us that no problem, we're going to go higher for now. But middle ground, like dancing around like in the middle, means that it's you're going to lose money. So we don't know yet. This is good. This is still okay. It should be really turning up like that. So that's basically it. All right, guys. I'm just showing you the bigger picture, and then let's talk stocks a little bit. So think about a few stocks you want me to look at. I'll throw in a couple that I like, and then we can end the session. And anyone with any quick questions while I'm setting up the next chart, feel free to throw it out. Ian, you're new. You understand some technical analysis or like technical charts and things like that?
Yeah, I've been watching your YouTube content for a while, actually.
Aside from me, like, have you sort of delved into technical analysis and stuff, or is Clueless trading your first entry, which is fantastic, but that's good.
I dipped and dabbed a little bit before, but I think in a proper learning, I think yeah, I've been mostly watching YouTube. Yeah.
I take that as a compliment. So that's fantastic. That's fantastic. Yeah, because we're not really in the business of trade. Like, I do a lot of training lately with a lot of new beginners. Generally, the people who are in our group are medium to advanced traders, right? So,
Yeah.
but I've taken the time to work with brand new traders, and it's exciting because I'm normally not used to teaching kindergarten. So it actually is good for my brain. It makes me think a little bit more of explaining concepts in a simple way. So this is one of the most exciting charts that people can look at. And can somebody tell me why it is so exciting? People who have been with us.
We spoke about a cup and
No. Wrong answer. Why is it exciting? Yeah, it's a right answer, but that's not the answer I was looking for. Somebody else step up and tell me why this chart is so exciting. Why do I give so much weighting to this chart? Why I've explained this a zillion times, and why this chart has worked for us literally 100% of the time. I'm very disappointed that none of you can come up with the answer. Paul, you know the answer.
Fib 50.
Exactly. Jesus Christ. This is the Fibonacci 50 chart, guys. How many times does somebody have to drum that through all your heads? Paul, we really have to do the Fib 50 t-shirts or something. Wake all these kids up. This is the Fibonacci level chart. This chart has worked, literally has an accuracy rate of 100%. Right or wrong, Paul?
It's working well.
Like, works like magic right from the bottom. I drew this chart from the top to the bottom, and I said, this is what the market wants to go to. And it's going to get there sooner than most people expect. And that was the Fib 50. Because I don't make these rules up. When you have an extreme scenario, up or down, in this particular case down, a drawdown of 30% roughly on the major indices, you're going to come back and regain back half that value. Ask Mr. Fibonacci, who lived in the 17th or 18th century, why this is so correct. Fibonacci retracements work in all aspects of life, and mostly in charts. Makes you crap loads of money, specifically for swing traders. Okay? When you see these lines with these numbers, the first thing you go, whoa, he's going in with the fib. All right? Exactly. So 0 fib, 23.6, the decimals, are moved to the left, 0.236, 23.6 fib, 38.2 fib 50, 0.5, 0.618 extension, 0.786, and then full pattern completion, top of the market, 1, fib 100. You can scroll down and look at fib extensions. Whoa, 1.61. That's 161.8. If we didn't have coronavirus, we'd be here right now, ladies and gentlemen. Okay, fib extensions I've shown on individual stocks of massive pullbacks. And I'm showing this to you. Forget fib extensions. We're just looking at the ones like between just standard pattern completion from top to bottom. Yes, fib 50. So let me give you a quick rundown for people who need a refresher and for people who are new. Guess where the market is right now as we speak? This is a live chart. Exactly at the Fib 50. You can make these things up, man. I'm pulling the big white rabbit off the hat like a magician. Right? Right there. It's at the Fib 50. I didn't make this up. Look where we are at the Fib 50. I said we would go in for a retest of the Fib 50 over the past 48 hours. We are retesting that. We can slip and slide and touch this bull flag breakout level. Well, this was a bull flag breakout level. It's still a downtrend line of 2750. Then I have a support line here, which is the one I explained before, right there, 2715. Below 2715, whoosh, we're going to drop so fast, your head's going to spin. But if we hold this level, we hold the Fib 50, we hold the downtrend lines, we're going to bounce. We're going to bounce. We could have a bounce within the next 24 to 48 hours, regardless of what's happening out there. That bounce, in my opinion, needs to be sold. So, Fibonacci 50. Downtrend lines right there. This is the type of bounce we might get, which should be like anywhere in the range of 300, 400, 500 points. Boom, they'll drop it again. Why? Because the lovely stochastics still haven't bottomed. We need to bottom. And this is what excites me. And this is what I wrote on Friday, ladies and gentlemen, that I showed you all. All you have to do is open your eyes and read. And you'll get it. It's not that hard. Once we bottom, we can then call the troops in to buy. Okay? Put your cash on the line. Go pedal to the metal, or ball. No, I'm not going to say that. All right, I'm going to say it. Balls to the wall. Okay? Exactly. Now, it might slip and slide around a little bit, but then you get a sharp bounce. But we're not there yet. That is why I don't want to be, you don't want to be putting in any substantial amount of money in market moving indices or market moving stocks when the market is kind of halfway there, 3/4 of the way there. We need to get oversold, and we are getting there fast. Nothing is more exciting for a tactical trader who has cash on the side, has nominal reduced long positions, has some SPY puts, which is a perfect setup. You always need to have some sort of long positions, in my opinion, because certain stocks will go higher regardless of the market. And we have seen that happen over and over again. So if you're not long and you have all your eggs in one basket on the short side, yeah, you'll get lucky once or twice. But in the scheme of things, this is still an uptrending market, as we saw on the monthly charts, the weekly chart especially. They're going to kill you. They're going to kill you when you're all on one side or another. So bottom line is they're going to kill you on the trading side, I mean. So this is what we need. Then we're getting there. And I think we get there within this range that I've explained quite a few times now. Now, regarding the MACD, it's fine. If I see a crossover down, then that's a different story. But so far, it's fine. So does everyone have a clear idea of what markets will do over the next week? Yes?
Yes.
Like, we pretty much like laid down the groundwork. And, that's exactly what it's going to do. We're going to drop. Or if the Fib 50, which the market loves to hug, it slips down below that at times, and then boom. So you want to make some fast, fat money? You can play the indices, you can play the SPIes, and I'm looking at the SPIes here, obviously, in the case, so you can buy SPX calls. But so far, so good. There's nothing actually wrong with the picture. This channel is where we're at. So is everyone clear on this? So when I show this chart, then you should be able to understand it. This is still a bull flag. The bull flag is still intact, believe it or not, even if we go to 2600. Yeah, even 2577, which is a long way from here. That's like 1,000+ points. The bull flag is still intact as long as we're within this channel. But do we want to go there if we are long? No. Do we want the market to crash down to this level if we are short? Somebody answer the question. If we're short
Yes.
SPY, we have SPY puts, and please, somebody new answer the question, please. Do we want the market to crash when we have SPY puts, which we
Yep.
have, by
Yes.
the way? Yes,
Definitely.
absolutely.
Yeah.
I mean, this futures down 29 doesn't do a heck of a deal for me, even though the futures, I mean, for those
The
SPY puts,
holiday
which
ends, right?
I want the markets to be down like 900 points in the morning. It's not going to happen, you know. But those hedges that we have, we need big downs. So that's really what we are. All right, let's talk stocks. Explain to you guys everything. And this getting this oversold so fast within 2 days, it went from being here to all the way just within Thursday and Friday. It did that. Hold on one second. This is really exciting. That's like a really fast reset. And we want a fast reset to buy things cheap again. Hey, that's a great slogan. Buy things cheap again. Buy stocks cheap again. All right. So that's a good. Hold on one second. All right. Let's get out of all the big market talk and everything, and let's entertain some
So Frank,
quick questions. Yes, please go ahead.
if
Frank, I
you
yeah.
SPY is at 281, that would be another great opportunity to go short again, correct?
I just went through all that stuff. You mean the SPY? You asked
Yes,
me about
SPY.
the SPY. Oh, okay. So let me look at the SPY. This is the actual SPY chart, right? This is definitively inverted hammer. So what you're saying two? So basically, this
Well,
is a daily chart of the SPY. It's actually looking pretty damn good. Not too bad. It hasn't really crossed down hard. So what's your question? When is it a great time to go short again? At what level?
I'm sorry, it was off the SPX. I just keep referring to the SPY because I look at the SPY a lot.
Yeah. So we're looking at the SPY right now. So what? So basically the SPY is right here. It should find a floor at the uptrending 20-day moving average 278. So what was your
Mhm.
question? What would be a great short? First of all, a great short does not matter on the numbers. You need to get that through your head, Zach. A great
Mhm.
short comes because the numbers, the patterns, and the internals all are severely overbought. So when I'm looking at the daily, it got overbought. It is not really breaking down. So nothing is a great short right now. A tactical short, a great short is something that you can go to bed with and sleep with for the next 3 days and make a lot of money without being rude. Okay?
Mhm.
So exactly, that's a great short. A great short is then when you can hold a multi-day short. In this type of market, you cannot hold a multi-day short position because the markets reset so fast that it turns around and goes the other way within the next 24 hours. So looking at the SPYs, does everyone understand? Because Zach had a very good question. Does everyone understand what he just asked?
Yeah.
Exactly. So even if I look at the weekly, that's an inverted hammer. They'll be like, oh my God. But looking at the candle structure, that's not bad. It's an inverted hammer within the body of the long-tailed doji and the body of this previous hammer, a very fat one, which was the 13th of April. So to me, this is not negative because all the averages are moving higher. It's still within range, and not most importantly, but vitally importantly, the stochastics are still crossing over. So anybody says that's it, and there's a lot of them on StockTwits and every other trading forum that you guys should visit, and you should have other people that you follow. I bet you they're going vastly negative right now, and they're going to get burned again. You go vastly negative when you're breaking major moving averages, when you're seeing internals breaking down hard. That's when you want to go, So somebody who went short here, and we definitively were short intraday bunch of times. It was beautiful. Remember, we were short calls at like 73 cents. We sold at $3.50, $4. I know some of you did. How beautiful was that? Exactly. But we were tactical shorts. We're not dogmatic shorts. You know what the difference between a tactical short and a dogmatic short is? Anyone? What's a dogmatic short?
Those ones that panic and think everything's going to hell.
I'm sorry, do what?
Those people that panic and think everything's just going to go crash.
Let's put it this way. What's the meaning of the word dogma? It doesn't have anything to do with dogs. What's the meaning of the word dogma?
Bias.
What's a dogmatic bull? What's a dogmatic short? Because it applies to both sides. In simple
So
English, if a guy on the street with a first grade education, okay, came to you and said, dude, explain to me what dogmatic means. Well, how would you gonna explain it? Because this is a very important concept for all traders.
like a very strong bias without any
Yes, exactly. An extreme bias.
Yeah.
Exactly. Here's a man with education from Melbourne, Australia. Exactly. It's a very strong bias. When you have a very strong bias on something in the stock market, you're dead. You're really dead meat. Hopefully not dog meat in China, in certain parts of the wet markets in China, but seriously, you're dead meat. So you cannot be dogmatic. Most traders are dogmatically biased. It's either like all or none. Like, oh, that's it, it's all over. Oh, wow, we're going to the moon. That's what kills them. That's what you see all day long in all the trading forums. What do they talk about? Oh, it's all over. It's here we go. No. Okay, exactly. Dogmatic for all of you non-English speakers on the courtesy of Mr. Ian in Australia, okay? Because Americans, we're all like non-English speakers. We don't even know how to speak English. Our president doesn't even know how to speak English at times. And I love Donald, okay? But I got to say it. He doesn't even know what sentences he's making. He just makes up things, okay? But people get it. That's what a great politician's all about. So bottom line is that we're like, we don't know how to speak English. So that's why S was dogmatic. So when a dogmatic chartist looks at this and says, oh, this is over. No, it's not. Because you got to look at the overall picture here and see whether or not everything is lining up for a major drop. And that's why never, I mean, I shouldn't say never. I shouldn't tell you how guys to talk or you guys to speak, but never say what's a great short. You know what a great short is? A great short is when everybody is bullish. That's a great short, Zach. Nobody is bullish. They were not bullish on the way up. They are certainly not bullish on a slight tactical move down because they're so dogmatically biased that the US is finished. I've seen this happen since 2009. I've seen this happen since 1998. Okay? All of you are guilty of major bias in the markets. Hopefully, after a couple of months of clueless trading, none of you will be as dogmatic as you were, both on the bullish side and the bearish side. Think about what I said. All right. Thanks, Ian. So yeah. So basically, so that's it. So honestly, where would be a good short? In answer to Zach's good question, is the 50-week moving average somewhere around 298.302. Once we penetrate these levels, any overshoot or any engagement in this zone of 298.66 to 302 would be a terrific short for maybe a day or two. I don't know, or maybe intraday, but a good short. You got it? Because at these levels, there are a lot of hardcore algorithmic high frequency trading programs and a lot of mom and pops too who got caught in the downdraft who are like, oh my God, there is a God. I am getting out of this goddamn stock market that hasn't made me sleep for the last 3 months. All my brokers, sell my crap right now because I'm almost even or I'm losing less. So once those mom and pops and those algos flush the market at these levels, you want to be a buyer. That is resistance. That's what we call resistance. Okay? The resistance, because somebody finally said, oh my God, I bought this stock at $5. Now it's at $4.50, $5. Let me just get the hell out of Dodge. I can't take this anymore. I love President Trump, but I hate the stock market. I don't care what he says. Exactly. All right, they sell. So yeah, so this would be a very, very good short level to buy. And even this level that I said, like, that's why I did some shorts. The 290 level and all this stuff. On the weekly, We still have room to move higher. All right, guys. Anyone have a quick taught you guys a lot of stuff. I'm getting tired now. What's anyone likes any particular stuff? Don't touch airline stocks right now. Seriously. Warren Buffett just
How about
cursed.
the,
Just cursed.
hey Frank, we didn't look at the VIX yet.
Oh, that is so right. We didn't. So I have to drag in my VIX screen. Yeah. That is one of the most important. Paul, man, thanks a lot. I am just. Okay, VIX. Okay, this is the VIX daily. This is the VIX daily, the one that we watch daily. Sorry, this is a VIX 1 hour, one that we'll watch during our trading hours. And I want you guys to take a quick look at it. Just stay in there, 10 seconds, I'll be back. This is a very important chart for day traders and for people wondering like, hey, should I hold a position overnight? But primarily for people, scalp traders, which you can make a lot of money on, this is a very critical chart. So take a look at it. I'll be back in 10 seconds. Okay, I'm back. Okay, so this is your intraday chart. Every single candle moving up means the market's moving down on the other side. It's really as simple as that. There is a pattern in play here. And this pattern is actually an inverse head and shoulder and a cup and handle, which means the VIX wants to go higher, which I'm dead right, because if the market opens down where we are looking at futures right now, everyone with me so far?
Yep.
Okay, I just want to make sure everyone was connected because sometimes, there's loose connection. So, which means the VIX should, given that futures are down 26 points, the VIX should open up somewhere around here at the open at 9:30 tomorrow, which means it would have again attempted to break out of that particular resistance zones, what I call either R2 or R3. There's a gap here. That's the reason this dotted line. Oh, here's the gap. Okay, this gap was from the 20th of April. So bottom line is that this is the level we have to monitor on the VIX, 40. This is very accurate, by the way. So bottom line is this was a cup and handle there, cup a handle, and it's going to open up here at the opening tomorrow. If the VIX, the short-term VIX, the fast stochastics are oversold as of Friday, okay, that's the reason I had the hedges, but I didn't keep a whole lot, okay, because things got oversold. On this side, I didn't keep a whole lot because the slow stow, what we call the S stock, is pointing down. So the S stock this will be up here by tomorrow morning. I'll post this chart, you'll see. And the VIX will be up here. If we break above this, the next level of contact, this is very accurate, guys. I'm telling you right now, the next level of contact is 43. If I see the VIX breaking out towards here, I will again reduce further long positions and initiate further shorts into the market for the day. For the day, okay? If I see and if the market really cracks, let's say the market for whatever reason, some terrible news comes out at 10 a.m., 11 a.m., the VIX is going to shoot towards 43. And if the market's down 600, 700, 800 points, then the VIX will be moving above 44. So that's your short-term view. So the short-term view on the VIX is that the short-term view is just telling us what the pattern it's starting to develop. So it is not a bearish pattern. It is a cup and handle, and generally cup and handles break higher, which it's doing right now with futures down 27. Now, let's take a look at the next chart, which is the daily. This gives us a slightly better view of what is coming. Is everyone with me so far?
Yeah.
Okay,
Yes.
good, good. So there's a lot of mixed pictures. I mean, I can see it, so I don't know if I have time to really explain it. But somebody just looking at it in a very simple form will look at this pattern, and this pattern is known as a falling wedge. Okay, it's known as a falling wedge. What do falling wedges do? They break out higher. If a VIX breaks out higher, that means market's going lower. Real simple. Okay, so this is the falling wedge from the top, and there is a little breakout that is in progress. However, that little breakout doesn't seem to be a bullish green candle. If it was, I would have bought more puts, bulked up my hedge position, which I have for tomorrow, expiring tomorrow, by the way. I didn't buy the one for next week because I have no freaking clue what's going to happen next week. All right, I kind of have a clue, but I'm not going to bet on it. So the bottom line is that I didn't see a large bullish green candle like this. You see one of these, you want to pedal to the metal, go short. Okay, but it is still this is what a falling wedge looks like. Same thing with stocks, and boom, it goes higher, and then starts reaching resistance levels. Maybe it comes down within a band. That's what it does. These are rules of the game. Technical analysis is nothing but an application, a visual application of human behavior. In this particular case, human behavior manifested through algorithmic high-frequency trading supercomputers. That's it. That's why technical analysis gives us so many pictures, visuals and stuff that we can read the cues on. The more you do it, the better you get, just like anything else in life. So bottom line is that I'm looking at the S stock. This is the slow stochastics. This is going to be my first signal. Is the market going to be down 1,000, 2,000 points, or is it going to be down 400, then come roaring back? I'm watching this very carefully. This seems to be kind of rolling, creating a rolling bottom. The minute I start to see the slow stochastics breaking like that, you are going to see the VIX trigger a vicious move towards 49.50, which was the last major, one of the one of the prior major resistance points. Any move on the VIX from the level that we're at, we closed at 37, should open up around 40 tomorrow, maybe. Yeah, 40 or less. Probably open up around 38, 39. Who knows? Will push, any move like that will push the market down an easy 600, 700, 800 points. But we're so used to it nowadays. So the daily, I'm watching this rolling slow stochastics, the rolling fast stochastics, all of them trending higher, suggesting downward pressure on the market short term. Are you guys with me so far?
Yep.
Yep. Any break over 50, this is like, that means the market's like 2,600, like it's down. But that's not the case. The VIX is still, in my opinion, subdued. It's still subdued. This line here, this blue line, is the mid-Bollinger. This line here, ladies and gentlemen, is the Bollinger Band. Which way are they pointing? Down, 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 which means good for the market. Now, let's take a look at the final thing. Wow, it's 10:48. Hey, so much. You guys are so excited, like sitting around listening to me, talk technical garbage for the last hour and 49 minutes. I don't even know I've been talking for the last hour and 49 minutes. So this is good. Okay. This is the ultimate. I've told you guys, stay long, stay long, stay long, stay long. I'm still overall, stay long at home. No, stay long at work. So key is, what are we seeing here? This is we bounced off. You can't make these things up, all right? We bounced off exactly the yellow dotted line. I didn't make this up, okay? The yellow dotted line is known as the pivot. What happens at pivot? You pivot from there. And that's exactly what it did. It hit the mid-Bollinger right there. Let me get the line here. Anybody who can understand this, and the more you look at it, the more you understand it. You can't understand it in one day. Well, some people can because they're a lot smarter. Okay? Some people are generally very smart, right? I'm not. That's the reason why I think I do better, because I'm not really not that smart. That's why I'm clueless at trading. But I learn real fast. Some people are like super smart, and they are like the crappiest traders in the world. You know, because they're just too smart. They're just sitting around analyzing things to death while the money's being made by people like us. So don't be too smart in trading. You'll lose. All right? So PhDs make the worst traders, by the way, just so you know. They like writing, quants are PhDs, they write programs, but they're the worst traders. So anyway, just giving a little tidbit. So the mid-Bollinger, the pivot, look what it did. Boom, went up. Interesting. Now, will it expand all the way here? We don't know. But what's the line that we always watch? What's this baby doing? It's trending down. That's your slow stow, the S stock. The S stock is still telling us the market has juice to go higher. Short-term volatility, reset pullbacks, longer term meaning going into the months of possibly May, June. We are in May. We are going higher. Where does the VIX, and this will answer Zach's question, where do you want to short the market hard in a big way is when the VIX, oops, let me just get this line. Okay, when the VIX gets down to my marked levels here, 25, 22, that's when you're going to have the whole media, all stripes, colors, and affiliations say, this is it, America's back. Boom, short it. That's when everybody's going to be like, yeah, look at that song, it's going to go to the moon, I bought this, I told you guys to buy it. They're all frigging liars, because they never tell you when they're buying it. They'll tell you after they sell it, like, oh, I told you so. After the fact traders, right? How many of you know people like that? Tons of them, right? Tons of them. So we're telling you beforehand, when the VIX hits these levels, 25, 27, 22 on the extreme case, short the market hard, because that's going to be the moment of heightened excitement, mini euphoria, not full euphoria. Full euphoria in the stock markets won't come for years, especially after this virus crisis. Okay, so forget that. So bottom line is, by that time the stows will be down here, and if the stows go all the way down here, put a lot of money and short the crap out of the market. Okay, that's the answer. Not looking at the spies only. Do you get what I just taught you? What I taught you is money that in your pocket, Zach. All right?
Yes.
Exactly. That's how real traders look at the market, through the back end, through the contrarian signals, the canary in the coal mine, this whatever you want to call it. All right. So I think the VIX does not. The S stocks don't go down to these extremely oversold levels. I think this uptrend line that I drew since last October, February of this year, where the stows will go around 30. The VIX will come down somewhere between 28, 30. One of the reasons could be that this whole reopening is a success, and there's going to be a lot of euphoria in the markets. And the VIX will hit these lower levels. Markets will shoot up towards that 3,100 level that I project, and you want to be a shorter at that point, short term, and then see what happens. But so the VIX is still pointing down. That means market still has juice to go higher. Short term, we're going to get pullbacks, and that's about it. So when it comes to stocks and stuff, no more time here, guys. Gotta get my beauty rest. So what do you call sleep? And more importantly, my dogs need to go out. So tomorrow is going to be very interesting. Markets are very bifurcated. That means that certain stocks are doing certain things, certain stocks are not. The stocks I like, certainly DM me on Twitter. for quick questions, not long-winded, like, oh, should I sell it here? Like, those are the dumbest questions I hate answering. Like, what the heck do I know whether you're up 500 or 5,000? You know, I mean, look at my charts and figure out whether you want to sell or not. A lot of the times I'm putting the exits of when I'm getting out, but certainly feel free to ask anything you want. Ian, you're new. Sign up as a member if you're really serious about this. If not, then please go away. I'm just kidding. Actually, please go away if you don't sign up as a member. And what you learn here is amazing. You just got a slice of it. And aside from that, I'm looking at my other screens with a lot of stocks on it. The market's going to be very stock selective, just letting you guys know. Don't keep on chasing the Apples, the Netflix, the Facebooks, and the Amazon all day long and thinking like, oh my God, why did I make that extra 5 points on it? Look at the very, what do you call, suggestions that I give. Come up with your own ideas. This market is a market of stocks, not just a stock market. I've said it, I'll say it again. All right? Stocks and certain stocks that I like Teladoc and everything. I think the stocks have huge future. Moderna, which we have traded so many times for the last 5 months, when no one even knew what that stock meant. They thought it was a fashion label. You know, nobody even knew it was a biotech company. All kinds of stuff's going to happen. So it's very stock selective, and that's all I can say. Have a great evening. God bless you all, and see you guys on the start of a great week tomorrow. Big thing is the jobs data on Friday. I'm looking at it. Productivity and cost. Thursday, Friday are big data days. What's tomorrow? Motor vehicle sales, no one cares. Factory orders, important. Tomorrow at 10 a.m. This is what I'm looking at. Any one of you guys can look at it. econoday.com. All right. So lots of Fed speakers, which is important. Lots of them. Nothing really happening here. Oh, ADP employment report on Wednesday. Employment. This is the one that the market is going to put a lot of, pressure on. I mean, a lot of coverage. Like, oh, jobs data. We know it's going to be horrible. So that's basically it. All right, guys. Have a great evening. See you tomorrow. Get some rest. Stay safe. Good night.
Thanks,
Bye.
man.
Yeah, anytime.